approach to investment really is you need to have disciplines that work in every environment. The most important thing in investment is discipline and to make sure you react to the same things the same way each time. That's why they call it an investment process, if you like. From that perspective, we always think that the fundamentals of a business should drive how you look at it. What do I mean by that? The best way to think about buying a share is as though you're buying the whole business. So I always try and think of companies in terms of the millions of dollars of revenue and profit they make and the billions of dollars that you're paying for the earnings. So when I say that, if you put yourself in the shoes of an owner and say, I have $500 million, would I spend all of this $500 million buying this business? It tends to focus the mind. Thinking about shares the same way, we'd say is the greatest discipline. It forces you to go back and say, what are the revenues I'm buying? Why do I think the prospects are good, bad, or indifferent? Why do I think the amount that the business is earning now is likely to be sustainable into the future? That will always hold you in good stead in terms of making sure you don't get carried away in what can be overly buoyant environments and environments where people get caught up in share price moves rather than whether the business fundamentals are actually keeping pace with those share price moves. The other thing that we'd say about an environment like now is we're in an uncomfortable territory when it comes to both asset prices, interest rates, and that leaves investors in a situation where financial leverage, which has been a real boom to asset prices over the past 25 years plus, is probably unlikely to provide the tailwinds that it has in the past. That means that in buying a business at prices which versus historic levels are now high by most standards, you want to be very cautious about the financing structures supporting those businesses. So when interest rates are high and asset prices are low, a lot of financial leverage is likely to work in your favour and make you more money, and the reverse is always true when you get an environment like this where asset prices are high, leverage is high and interest rates are really low. Those tailwinds for us are largely behind you. You want to take a very cautious approach about the financing structures behind businesses and how you're approaching investment, because those tailwinds are in the rear vision mirror. You've got to try and look forward in the windscreen.